Let's get more on today's big rebound and where one of the world's great investors sees things heading from here. Jeffrey Gundlach is the founder, CEO, and CIO of DoubleLine Capital. Joins us now for our CNBC exclusive. It's good to have you. Thank you for coming on today.
Good to see you, Judge. I missed you last Wednesday.
Missed you as well. But you know what? You've had the opportunity now to let everything marinate a little bit. So it's, I think, a great time to still catch up with you. And we'll get to all things Fed in a moment, obviously. But I would like to get your initial thoughts just broadly on these markets, because there's so much going on. You had the headlines, this morning that moved the market. Just tell me from your perspective where you think we are right now.
I thought it was really interesting about the decline of the last few weeks in risk assets that the VIX index never really got above 30, which was really strange. I heard a lot of guests on CNBC saying, well, if the VIX gets above 40, maybe that's your signal that things are washed out and it's time to buy. But in spite of all of the volatility, we didn't really see the VIX go up. Meanwhile, the spreads on fixed income have definitely been on the march. It doesn't get a lot of play because it was swamped by war headlines and private credit kind of smash ups. But high yield spreads have risen by something like 60 basis points, maybe at the wide 70 basis points from where they were. And all corporate credit is definitely widening. Emerging markets have been widening. What's been the safety place is what we expected would be the safety place, which is things like asset-backed securities, commercial mortgage-backed securities. They've actually been some of the most stable asset classes. So I feel like that today's action is very good. I mean, we closed very weakly in the market on Friday, pretty much on the lows. And some people, I heard Tom Lee saying some institutional clients were looking to short the market at the open today. Doesn't look like that happened. If they did, they're regretting it now. But the market, I think, is in a revaluation phase. And I believe that money is it's hard to make money this year. It started out that people were making money in foreign markets and in commodities, but while commodities and gold specifically are still up, they're not up very much. We were talking about this in our strategy meetings the last couple of weeks, and I was saying, I really think for the long haul, I still want to be in commodities, and I still want to have a gold position. But my enthusiasm for gold was definitely exceeded last year by the market's actual action. You might remember, Scott, that I talked about gold would go above 4,000 last year. And we talked about that when it was well below 4,000. Well, I was not enthusiastic enough, I guess, because it went up to almost 5,500. But now we're back down at about what I thought would be the target for gold as a high point for the year. But at this level, I think it's a very good opportunity to add to gold and to add to commodities. I'm not terribly enthusiastic about credit or stocks at this point. I don't think they're cheap enough. I think I would want to see the VIX go higher to signal a real washout on the stock market.